Good morning, traders, and welcome. Today is Thursday, May 4th. I'm Michael Boutros, currency strategist with SB Trade Desk. Good to be with you guys here this morning for this intraday strategy webinar and pre-NFP update. Obviously, we got the FOMC yesterday. We'll talk about the implications of that. And then we'll look at the dollar crosses as we head into tomorrow's non-farm payrolls release. We're expecting a print of about 190,000 tomorrow. Now, remember, the previous month was really weak at just 98,000. Unemployment is widely expected to uptick by 0.1 to 4.6. But as always, we'll be looking for any shifts in the labor force participation market as that number comes out tomorrow. So don't also forget, guys, tomorrow is double whammy jobs Friday. We get the we get the monthly figures for employment from Canada as well. Puts a real focus on dollar CAD, as typically you'll see some pretty good volatility on that cross if we do get a miss on either or of those releases. So a lot to cover today. Good to be with you guys here this morning. On the menu, DXY, obviously, Aussie dollar, sterling dollar, gold and silver from last night. From the previous update, I do want to review dollar yen, Kiwi dollar, Euro Kiwi, Kiwi CAD, and Kiwi yen. Kiwi yen, I'm going a little bit more neutral here. I don't really want to be long yen, guys, per se just yet. So not really excited about Kiwi yen anymore. And then also just a quick look at Euro Aus, which I know you guys have been asking about here in the room. So I do want to leave room for questions at the end, guys. If there are any pairs or assets or markets you guys want to follow, please feel free to throw them on the message board. Graham wants to take a look at the dragon. Sterling yen, you got it, brother. JPY. A good one to the upside, I think. A good one to the upside, I think. I just don't, again, I'm not really too conviction. I don't have really strong conviction on the yen in and of itself, but we'll definitely take a look. So Graham wants pound yen. Sandy, great to see you. Still long Euro Aus and Sterling Aus, Mike? Sure. Euro Aus. Oh, we got Euro Aus. I got that one on you. Sterling Aus, I have not taken a look at. Also another one I'd expect to see some upside here for Sandy. Would have to look at sterling today, Sandy. Yeah, I do have sterling on the list. And Puja, euro dollar. Obviously, where would we be? We're on the long side of the swing. The swing trades are on the long side of euro as we speak. Nice entry there at 108.86 Puja. Awesome, awesome. Yeah, so Jamie's entry was right around 109. The 108.86 barrier was a really nice level, Puja, if you remember the scalp charts from earlier in the week. So I'm glad you took advantage of that one as well. I do have euro at near-term resistance right around here where we capped out. So you could get some pullback into the U.S. Open, but largely speaking, I do like where we rebounded off of last night. So euro here for Puja. Okay, let's jump right into the charts. And as always, throughout the course of the session, guys, if you have any other questions or assets that you want to cover, just feel free to throw them on the message board. All right. Dollar index, here's what we look like heading into the U.S. Open. So tomorrow's non-farm payrolls, you saw the NFP or the FOMC come out yesterday with a much more reserved tone, okay? We got the same exact thing. Not a damn thing has changed as far as interest rate expectations. The real thing that we were looking for, as I noted here in the webinar yesterday, was adjustments to the balance sheet. That's really what everyone's looking for, okay? We're expecting 2 more hikes this year. They're not going to give us further clarity because the Fed is never going to pre-commit to an interest rate hike without the data being there to warrant it. So the focus was on any hints of, okay, you know, we're ready to offload the balance sheet or we'll be looking to normalize the balance sheet moving forward. We didn't get any of that. So with the dollar where it was positioned, we already came into this thing saying, look, 98.69 is support. That's the 2016 open. That's the low that we made last week. And the focus range to start off this week is 98.69 into 98.38/50, 99.43/53, this 10 pip zone here. Well, that's exactly where we capped it at yesterday's advance. Here's what the intraday chart looks like from last night, or rather right now, and here's what it looked like last night. Okay, so we came right into that resistance zone. It held, remember, these are both levels of interest for short exposure as far as near-term intraday trades, with our broader bearish invalidation still up here. I need to leave a little bit more room for a possible rally here heading into NFPs. That being said, you're still looking for exhaustion. You're still looking for a new high here in my opinion, on the dollar index to get short again. Okay, keep in mind the broader picture, guys, of where we are. Basic trendline support extending off the 2016 lows has broken and offered resistance on a closed basis essentially since. Again, there's that January high day close from last year, which has been a very nice pivot in price, and that median line just above. So you could get a little bit more of a stretch higher. Momentum isn't really giving us much here, but I'm mindful of trying to chase the dollar higher here. I'd rather be looking for a rally to get back on the short side. Specifically, if we break through 99.53, look for that rally to extend up into 99.75, which of course is the uncovered close, or of course 100, both levels of interest. Any questions on the dollar index? Again, a very nice way to just be able to gauge base dollar movements. Inherently very heavily weighted the euro. So with the euro trading at what we just said, near-term resistance, wouldn't be too surprised to see a little bit more of a dollar pop here near-term into the U.S. Open, get a pullback in the euro. Again, obviously we're still looking for further upside in the euro, largely speaking further downside in the index. DXY, ICE dollar index, questions heading into non-farm payrolls. So what's the game plan moving into non-farm payrolls tomorrow? Well, now that we got the Fed out of the way, the main thing that the Fed has let me take it one step back, guys. So the main thing that we also took away from the Fed is that they basically snuffed off the weakness that we saw in the first quarter. And one thing that I wanted to note is that they downplayed it, but they recognized it. It'd be a whole different ballgame if they came into the release and they didn't even note the weakness that we saw in the first quarter and said things are on pat, yada, yada, yada. I think markets would have taken that with a little bit more of an aggressive normalization policy outlook. But the fact that they noted it but dismissed it sort of says, okay, we recognize that there was a weak quarter. It's likely to be transitory. Moving forward, as long as the data continues to be consistent, we're going to be moving forward with normalization. So kind of dismissing some of that weakness that we saw. So with inflation, core PCE, the personal consumption expenditure, now at 2%, and employment, largely speaking, at the Fed's quote-unquote natural rate of unemployment at 4.5%. We're expecting an uptick tomorrow, but you get the picture. It's very hard for them to continue to justify keeping rates this low. So as we head into non-farm payrolls tomorrow, what you need to get, listen, anything in the range of, we're expecting, like I said, 190,000, anything in the range of 150 to 250, I think you're pretty much status quo as far as interest rate expectations are concerned. Anything sub 150, I think you would start to see markets show a little bit more of a concern that the labor market slack may be picking up, which may hinder the Fed's ability to normalize. Anything northbound of 250 might see those expectations for 2 hikes move up to 3, and that certainly could fuel inflows into the dollar. So what does that mean for us as traders moving into the release? Very simple, guys. If you do see a pop above 99.53 on the release tomorrow, I would be expecting the rally to extend up towards that 100 marker, to that 99.75 marker. Still would be areas of interest for fade opportunities, as long as we don't get like a 220 print or something, or a 250 print. Both of these would still be areas of interest for exhaustions on a spike tomorrow. If the data misses and you get another 98,000 print like we did last month, look for the break below 98.69 to really set this off. I mean, there's really nothing below this until you get down to that lower parallel, which I don't have too much conviction on. You only have two touch points. And then we ran through it here last month. But more importantly, that major fib confluence at 97.67 to 97.87, 100%, 2 equal legs down from the high, and the broader 50% retracement from the advance off last year's low. So the levels are exceptionally clean. You're still holding a major critical range between 99.53 and 98.69 heading into the release. Look for non-farm payrolls to really prompt some further price action as we get deeper into May trade. All right. Any questions on dollar index? Going once, going twice. Okay. Let's jump right into the Aussie dollar. Aussie dollar, worst performer yesterday, down 1.5%. It was a beautiful play. I know that we were possibly looking for a scenario where you saw a breakout here. I personally, as we've been following in the intraday charts, guys, this was a big, big region. Our bearish invalidation level was just higher, so we came pretty darn close to it, but it held really nicely. And then again, obviously the break last night that we discussed below the weekly open and the weekly opening range at 74.68 certainly shifted the focus to the downside, and here we are taking out targets at 74.17 and just lower. We haven't scratched it per se. The low so far is 73.88. The retracement sits at 73.85. That's the key 618 retracement of the advance off the lows that we made for December. So certainly coming into an area of interest for near-term support. I would not want to chase this, guys, any further for fresh short exposure from here. Okay, you could get a bounce. Again, we talked about the fact that the dollar index could see a little bit more of a pop higher, could give this thing a little bit more of a deep pull into this region before we bounce. But larger story speaking, pretty decent pivot in price. Resistance, support, support, just below the 618. This is the same slope, it's a parallel of this formation, which is the same slope as basic trendline resistance, which we've tagged 5 times here before inevitably turning lower. So it's just such a clean structure, and you don't get these too often, guys. So use them when you get them. No change to any of the levels from last night. As we said, bearish invalidation on the near-term decline for Aussie remains at that weekly open marker right here. So as long as price stays below this level, you want to be mindful of the downside. We broke that level at 74.17 yesterday. We're now testing this key zone right here. So I am expecting a little bit more of a possible rebound or a possible hold, maybe some sideways lateral consolidation before anything major. But this is a pretty big level near term, both on account of slope and on account of Fibonacci support. A good one to be looking at tomorrow during the NFP release. And certainly if you do see the dollar pull back aggressively or you get a weak reversal off the dollar, might give this a nice reset again for a little bit of a rebound here to get back on the short side for Aussie. Any questions on Australian dollars? Really not much to update. It was a pretty nice trade. Again, if you go earlier in the week, guys, I always have the previous link for you. If you go to the update from the 1st, we were just coming up into that region of resistance, and we were looking, as we headed into the RBA, we were looking to see if we can get a spike into that region for a hold, and that's exactly what happened. So the subsequent break below the weekly open, the weekly opening range low, keeps the focus lower while below that level. Questions on Aussie? Okay, that is number 2. Number 3, sterling coming into some support. Here's the British pound look like last night. I wanted to highlight this level at 128.27. It's a former 100% extension from the advance off the lows, but it's also the median line right here that you see on this chart. I know it was not the cleanest last week, but it converged on that fib, and I did want to highlight that as near-term support. So obviously, as we've been, constructive on the pound for some time, this was our threshold. A break below 128.27, I think, would have prompted a larger decline. We'd be looking for long entries down here on such a scenario. But as it stands right now, guys, we simply dipped into the support zone, rallied back up, and we're still holding the weekly opening range. So as far as this trade is concerned, you have clear-cut conviction as far as the levels that we're looking at, but near term, yeah, it's kind of still within the weekly opening range. Here's what pound looks like right now. Okay, so you can see that in overnight trade, the actual exact stretch low was 128.29. I mean, it doesn't get cleaner than this, guys. If you ever have doubts on the technicals, just go back and look at the charts. So a really nice tag of that former fib level there as support. Saw a rebound in overnight trade. But again, the weekly opening range, the monthly and weekly opens are all still in this tight range. So I don't really have a clear-cut conviction bias on sterling per se. Sandy and Graham, for those of you guys who are looking for pounds setups, I'm still constructive pound, but heading into NFPs tomorrow on the immediate approach, you have to respect a break of the weekly opening range. You know what I mean? If this breaks sub 128.27, I'd be looking for 27.55. I'd be looking for the 27 handle as possible re-entries for the long side. At the same respect, if we break the highs, I don't know if I can justify just trying to chase this. You know what I mean? I guess if you got a long position off this last night, you're looking good. You shouldn't be maxing out, or you shouldn't be targeting anything above the weekly open, in my humble opinion. But we have to respect the break of this really near-term range. And while the broader picture stays constructive above 127, that's still almost 200 pips away from where we are right now. So remember, guys, it's not about just knowing the direction. It's about having a trade setup. And while I just want to be a long pound, it's just not there yet. I have a long entry today at the London Open, says Sandy. So you're in it right now? So again, on the long side, July low day close. Okay, awesome, Sandy. Nice entry, by the way. So today, and nice level, by the way. On the long side, I would be looking at the July low day close, okay, which was right here. Not really a big level, but you've seen some pivot around that this week. That's 129.26. And then again, the monthly open, the weekly open, the weekly opening range highs. All three of those technical factors come into this 29.50, 29.60 range. So that's your barrier of entry, Sandy. If we rally through that, I think you're on set. I think you have a beautiful entry. But it's going to be kind of hairy as we get into that region. So that's your focus region, specifically on the trade that you're holding there, that you would want to get through to really see a lot more upside approach on that. As you already know, I trade with weekly pivot levels, and yes, it is at a weekly pivot point. Right on. Right on. Love to see when those pivots actually converge on levels that we're looking at, whether it's Fibonacci levels, moving averages, structural support, median lines. When those converge on pivots, I put a lot more emphasis on it. And Sandy saying they are exactly at your levels. Smiley face. Well, cheers. Again, further conviction, right? That's all we're doing with analysis, guys. We're trying to find conviction on a broader directional bias and key levels that we want to operate off of. So nice job, Sandy. Okay, I'm going to take a quick segue and go over gold and silver from last night. There's been a lot of interest, guys. I've been getting a lot of questions from both you here in the room and on Twitter on the commodity block, and specifically what's happening with gold and silver. Gold, basically saw a full-on breakdown yesterday. Silver prices coming into a massive area of support, and we'll talk about both of those. Any questions on the pound before I move off? No changes to any of the levels from yesterday. Again, to see the daily chart on any of these, guys, always remember the daily chart's never more than one click away. So you can click on the link at the bottom to see the daily and 240-minute previous charts. Gold. Sandy says, that's what I learned with Daily Effects on Demand daily when I was in New York. Priceless. I miss it, says Sandy. Yeah, the good old days of Daily Effects on Demand. That was a program I started with Daily Effects years and years and years ago. I remember, Sandy, of course. That was kind of the birthing place, let's call it, of SB Trade Desk, I guess, as well. But I digress. Into gold. Here's what gold prices look like yesterday. So again, basically a just full-on breakdown. We talked about gold in the webinar. If you guys remember, 1241 for me was my target on the downside. This thing collapsed right through. Here's what 1241 right here. Okay, that's the former swing lows from last year's October decline. Really nice pivot on a close basis as we rally back into February. Really nice support after we broke through it as resistance in March, and it converged on that median line that we've been working off of. This is a larger median line formation, the 50 line coming here, boom, boom, support, break, pivot, a little messy, and that was there too. We closed well below it, 1237, which is why yesterday in the report I continued to favor a downside bias, even though I was looking for support here. Keep in mind that's also the lows from the previous month. So yeah, it's a breakdown. You don't want to fight it. There's really nothing on tap. The next target at 1229 has already hit. That's the 38.2 retracement. Next downside target, 1220. That's the 100-day moving average and slope support of the downside slope. So again, to bring this back, I do want to take it back to the weekly chart real quick. We'll go into the intraday charts as well for gold. Looks pretty clean. But here's what gold looks like on the weekly charts. And you can see the levels that we're compromising right now, kind of critical. Kind of critical, okay? This week's close will be paramount as far as trying to ascertain what the next move here is for gold on a weekly broader basis. Noting that on the weekly charts, we came from the 30 level in momentum. We turned right at 60. Things to pay attention to, right? In strong downtrends, momentum should find resistance at 60. Don't take my word for it. Doesn't mean anything. Look at price action all throughout the decline, 2013, 2014, 2015. Momentum found resistance at 60, resistance at 60. The breakthrough 60 last year was the onset of the uptrend. And here we are through 60, held 40 as support. Once we broke 40, now you want to see that reversal through 60 again to continue to favor the upside. The fact that 60 held as resistance here, we're back trading below 50, does have me looking lower in gold. Okay, not the whole story has changed, but certainly the near-term story does risk further losses. So this is the weekly chart. Really good on these trades, guys, especially when they make big intraday, intra-week moves. To take a step back and see where we are in broader trend, kind of get a broader picture, a clearer picture of what's going on. Gold this week has broken the weekly range, so no coming back. Sandy, I'm with you on that. It was a very clear-cut break of the weekly opening range. I'll show you that in a moment on the intraday charts, but I'm 100% with you. Very clear. And not only that, Sandy, for me, it was this break here below 1260. I highlighted this last week. That was the 52-week moving average, former slope or just a slope pivot that we've been working with, and the former highs from the previous swing. So 1260, 1261 was a big region. It was also the initial weekly opening range high, or the initial weekly opening range lows. Break, sayonara, right? So the weekly chart. Again, feel free to take a snapshot of this if you don't have it, and you want to refer to it later. The daily chart, again, just to go back, a closer look of near-term price action, again highlights the near-term target on a continued move lower here into 1220, 1221. I'm short on gold waiting for 1220, says Karthik. Karthik, I love that level. You know, you just watch intraday price action. I would hate to see you kind of miss exit on that on $1 or so. So watch what the intraday picture looks like here. But yeah, 1220 is big. You got that 100-day moving average. Like I said, those former swing highs, former swing lows. Just below that, basic trendline support from the January and March lows. Okay, so this whole zone, I would even drop it into like 1215. Pretty big, pretty big. Okay, now this is just a drill. Do not panic. This is just a drill. But I do want to see what this looks like. And if you draw that, you can see the 50 line offering a nice pivot with a break, and the median line further highlighting that key area of support. And this is why I was saying, 1220 is the ideal target, but watch just above that, like 1222, you have that median line. Just below that, 1215, you have that trend line support. So I try to give you guys zones, right? You always want to try to keep your targets on the inside of the zone if you can. So Karthik, just a word of advice there, but I do love that level. I do love that level. So let's see if we can't get that dip into 1220 intraday. Here's what gold looks like on the charts. Okay, and this is why I was a little bit more concerned about chasing below 1229, 1230 on the immediate advance or on the immediate decline. I kind of was looking for a bounce here, Karthik, to get back in. Bearish invalidation, 1251, or excuse me, near-term resistance, and the weekly opening range lows right here at 1251. Excuse me, it wasn't 1260. Here's 1260. That was the support we were looking for to start the week. But the weekly opening range low was clearly defined right here on this break yesterday. And again, you're looking for a Thursday, Friday low. So we're coming into some near-term slope support. I don't want to stress this slope, but it is the 38.2 retracement of the advance from December. So just something I do want to highlight. Next downside target, there's that 1220. Again, from a slope standpoint, you're way ahead of schedule, but from the daily charts, you highlighted and saw that key level there. Yeah, I mean, I wouldn't even want to start to get too fancy with it, but you could look at something like that too. It brings it in. Pretty clean, very basic. I tried to clean it up. I did a lot of work on this yesterday. We were looking at all kinds of stuff here with gold. I really was very confused with what was going on, but yesterday's price action finally offered some clarity. 1223 would be good. Karthik, again, yeah, I wouldn't. Here's the thing, Karthik. When we're trying to exit a position like that, I don't want to ever just put a static price target. It's not a swing trade. This is a lot more intraday. So we watch what price action's doing. 1223, Karthik, is where I'd start to shave some off. Take a lot off here, take a lot off there, or take a position off there. And then as we get lower, you want to bring in your stops and just keep pushing your targets into 1220, I think is a good way for this position. Again, I don't know your entry and what your personal circumstances are, but that's how I would look to trade this position. Certainly a dip into that lower parallel would be a nice area to find a little bit more of a support bounce in my humble opinion. Hey, Sandy, I thought I responded to that email. The intern forwarded to me. Sandy, so the alerts, guys, I did get a lot of requests for additional people to be signed up for the beta alerts for the SB signals. We can't add anyone in just yet to the beta program. We're going to have that hopefully by next week. I'll have a way where I can add in further beta users. The beta period is only for a month or two, and then we're going to open up to everyone. So obviously, right now we're just in the testing phases. We just rolled it out. So Sandy, I will keep you guys updated within the next week or so. I'll be able to add more beta users, so I'll bring you guys all on board. And then within the next 2 or 3 months, everyone will be more than welcome to sign up on their own right on the website. So I'll keep you guys updated with that, Sandy. Sorry, I didn't get back to you on that. Hey, Karthik, my pleasure, man. Nice entry, beautiful trade. Keep it up. Keep it up. I would have my stop at break even, just as a again, my personal humble opinion, Karthik, on a trade like that, because you have a good entry on it, and I do think you're well on your way. So cheers on that. Any questions on gold? Wow, I never thought we'd get so deep into the gold trade. Pooja, yep, we're working on that as well. It's a technology thing. Obviously, it takes a little time on our end to get all that through, but developers are working on that. That's our ideal. Our ideal thing would be able to plug those alerts into the Twitter handle for sure. Okay, that was number 4. I'm going to pick up the pace just a tad here, going into silver, a trade that you guys have requested over and over again. And certainly from my standpoint, I just thought it was really pertinent to highlight this major key support level that we were talking about and we're heading into right now. This level is basically defined by a 764 retracement of the advance from the December lows. That's not a big deal. But the big deal, or the bigger deal, I would want to say, is this level right here at 1627 is the close low for this dip here. It's the initial close high for this rally here, the reversal rally we saw on the 3rd of the year of January. It's the 50 line of the current operative descending slope. And it's this pivot here for this slope line, which is a mirror or a parallel of the highs that we made both last year and this year. Take a parallel of that high. I think I extended it off the January high, which just happened to show some pivots here. I'm not stressing these, just extending it off the January initial high here. Caught the lows, and that converges all in this range between 1627 and 1635. Critical support near term for silver. Now you did see a little bounce in overnight trade, take you back into 1661. I do like resistance at 1685. I want to see price hold below that downside break. You're looking for 1595. Okay, nice pivot in price. More importantly, the 1618 extension that takes you down into 1570. And one other thing I did not add, guys, but I just want to take a quick look at, bear with me one moment, is a broader extension off this high. And if you do that, you'll see that the 618 actually comes out right at the 786 retracement of the larger advance from the 2015 lows, and that's 1523. Now listen, this is just for the sake of analysis, guys. Down here would necessitate a break of the yearly opening range. I think, if that does materialize, that's just an initial target, real near term. But as it stands right now, into the U.S. trade session, you want to be watching this key support. If it gives out 1595, 1570 are initial targets, resistance and near-term bearish invalidation remains at 1685. Any questions on silver? Finally getting some clarity on this puppy. She looks pretty good. Looks pretty good. I can't even tell you how many days we have down now. I mean, this is getting just insane. This is getting insane. And the momentum is in such oversold territory, guys, that, again, you don't want to be the kind of guy trying to call a low. We're here to recognize when price is at a critical juncture in price. From a momentum standpoint, the market still is super heavy. Okay? So for me, it would need to be pretty strong signal to try to fade this move at this point. I don't have too much clarity on the intraday charts. Here's what it does look like, though. Again, here's that key zone of support that we're coming into right now. Could see a little give back off this region, but I wouldn't want to be holding short exposure into this as we speak into the U.S. Open. If we materialize with the break, we're going to miss it. But if you are holding shorts, this is an area of which for sure you want to take some off the table, bring your stops to break even or better, or if not, actually just get out of the position. But certainly an initial area of support I'm looking at for silver. Questions? Number 5. Getting beat up. Silver's just getting beat up. Okay, a quick segue back into some of the dollar crosses. Obviously, we're heading into non-farm payrolls tomorrow. We do want to talk about dollar yen, Kiwi dollar. First of all, Kiwi dollar, or dollar yen rather, we'll start there, targeting resistance, Kiwi dollar targeting support. Here's what they look like. And these are setups from the 5.2 update. So let's go back to that. So here's what dollar yen looked like earlier in the week. And we had noted the material break above 111.45, 111.07. That was the area of resistance and the opening range highs from last month. We talked about it ad nauseum. We sat there for a couple of days, finally stretching higher early in this week, taking out, initial targets at 112.13. The subsequent target is at 113. It was basically like 113.20, 113.37, this zone right here. You had the 100-day moving average. You had the basic upper median line parallel or channel resistance. You had 38, you had a 50% retracement. That's the level I'm looking at right. Oh, it's right here. That's the level I'm looking at right now. So we're checking it right now. Actually, the median line at this point is being tested at 113. So you have to open up that zone a little bit more to account for time. Remember, this was back on the 2nd, so a couple of days back at this point. So this is the near-term resistance target. I think you can get a little bit more upside heading to the U.S. Open, but 113.37 is a big region, okay? Moving into the 240-minute chart, here's what it looked like, again, earlier in the week on the 2nd. After taking out that first target, topside break, we're looking for this big zone here. I don't like to give you zones this big. It's basically like 50 pips almost, but, we're working with what price gives us. So we've continued to drift higher. Here's what the intraday chart looks like now for dollar yen. Okay, we're just coming into the scratch of that zone. We're just coming into the end of the bottom sort of region of that zone. Here's the 120-minute look like, and here's where we are now. Okay, so we started off, or back on, back here on the 2nd, we had our bearish or our bullish, invalidation level at the weekly opening range lows. At this point, I'm pretty comfortable bringing up the bearish invalidation up, or the bullish, invalidation up to 111.45. To be quite frank with you guys, I'm looking for exhaustion into this region. Near term, heading to non-farm payrolls might be an opportunity where you start to see, dollar yen's been doing its own thing, right? And it tends to track risk a little bit more. So if you get an adverse dollar reaction or you get the dollar pulling back, I do think that's an opportunity both to play dollar yen short and then use that pullback to inevitably get on a long side of trade for a breakout. Again, just my humble expectations. I'm not a real big fan of playing dollar yen tomorrow per se because I don't think, unless we get a far out print, I don't really think we'll get all that much volatility. But that being said, dollar yen is typically a very strong performer to U.S. data because of the correlation with U.S. yields and debt. When you get really strong metrics in the U.S. or strong reactions to U.S. data, typically dollar yen's the go-to, right? So you want to look at this near-term resistance here into 113.37. A breach above that, and you're looking like 114.60 as an initial target, and that's a big level. 618 retracement. If you look here to the left, you also have some swing highs and the close highs from back here. Big region, but there's really nothing in between. So pretty big area of resistance dollar yen is climbing into ahead of NFPs at 113.37. Questions on dollar yen? This is sort of like the last-ditch effort. If this downside slope is holding, price should not go above this region. Let's just say it like that. If this slope is going to hold, this should be concrete resistance for now. What about to short now but holding for dollar yen? Was about to short now but holding for dollar yen. I thought you were asking me, Karthik. Yeah, if we get a stretch into 1337, I'm interested. I'm actually interested if you guys, if we get another spike into 113, it might be worth a shot to take a stab against it. I kind of would like to see a push and then a failure and a move back below 113 to get us entry. My ideal play on trying to play these turns, guys, is you want the market to spike into a high first so that you have a stop against it. I'm not going to just get short and put a stop against 1337 because what if it goes to 1339, right? So you want to initially look for the opening range for the session to set that high and pull back. If we do scratch 1320, 1330, and then we pull back sub 13, that would be an ideal type of play to try to move the reversal. In such a scenario, by the way, Karthik, you want to take a basic retracement to that new high and play the retracement levels. Okay, so we'll have to readjust these downside targets once we do make a near-term high. Right now, I'm looking for exhaustion. I want to see this thing stretch and fail. Make sense? Okay, moving right along. That was dollar yen. Look for dollar yen price action tomorrow. Should see some volatility in the back of that NFP release. Kiwi dollar looks like this. Absolutely, thank you on that. Hey, more than welcome, Karthik. Kiwi dollar looks very interesting. Also coming into a major area of support. Unlike the Aussie, though, I think the Kiwi downside is a little bit more, or let me say this, I want to curb my appetite for the downside of Kiwi. Aussie really accelerating a little bit more. We noted that was at support. Why can't I find my Kiwi chart? Oh, here it is. But Kiwi also probing this key region, and that region was defined last week, guys, 68.60 to 68.85. We did make one daily close below that yesterday before ripping, or last week before ripping higher. We started off this week noting that we were at that support with our broader bearish invalidation up at 69.75. We kind of came pretty close to it before turning over. So the break back below 69.09 shifts things back to this key region, and we're still pushing below it. We haven't broken, or we haven't made a convincing break yet of the weekly opening range low, but I suspect we will. So downside targets, let me take a step back, guys. Here's the daily chart. Probably should have showed you this first, but I'm sure you guys have seen this before. So, all of the levels remain unchanged. This was a huge area of support. The yearly low, the December low, a 50% retracement. There was so much stacked up here, and obviously you saw the rebound that we made came right into former support, now resistance, and here's a full round trip. Outside day reversal yesterday off resistance is a bearish development. Okay, so certainly that inherently takes me out of any type of inclination to try to get long on this pair. You know, typically, like I said, outside day reversals and at the highs and lows are what you want to be looking for. An outside day reversal in a downtrend to the downside isn't going to help you, but an outside, well, let me take that back. On a rebound, it will, like here. We're in the confines of a downtrend, outside day reversal to the downside after rebounding shifts the focus lower, but we're testing the lows. Long story short, looking for a drop into that 2016 open at 68.27. That converges on basic trendline support extending off the 2015 lows. And that's going to be your barrier of entry for, you know, the next super couple of legs down in Kiwi. Looking for 67.50, 67.13 would be the key 618. Really nice pivot. And also a slope line here for a parallel that we've been following for the broader structure. So again, another pair where I don't really have a play per se, but the levels and the clarity of the directional bias I think is pretty clear. So for those of you who are involved in Kiwi dollar, if you're holding short exposure, I still like the short side sub 68.85 at this point, okay, with the next downside target still being 68.27. And just keep your eye on this. Let me just bring this in real quick. It's just been a decent pivot. Basic trendline resistance. Boom, boom. Really nice touches, really nice touches. Break gave you the run. Support gave you a bounce. That converges just below right here. All right, so let me clean this up real quick. We'll stay bearish sub here. Downside targets on the break. We can go ahead and dump this at this point. This retracement is null and void. This retracement is null and void. All right. Cleaned up some of the levels a little bit, but here's what I'd be looking at near term. We're going to have to add some structure to this once we finally get the break of the lows, but until we do, this is what I'll be looking at as far as near-term targets on a move lower in Kiwi, with this being, like I said, near-term critical support. I know we're breaking through 68.60 now, but from a slope standpoint, still a pretty big region. Okay, look on the daily chart to the right here, all converging on that 2015 trendline support. Let me also copy that here for you. All right. Karthik says, Kiwi dollar 69. I saw impending orders to short. I'm new to SB. Is it suggesting to short to wait and check? And is this the right place to ask? Well, Karthik, you can ask us anything in any forum. Okay, we try to keep it as casual as we want. We're all traders here. We're sitting on the desk, so you're in the right place. Let me tell you that much. Karthik, so the way that it works with active trades, or let me bring up Jamie's part of the site. So when you're on the SB homepage, the swing updates will have all the details, and those are all under long-term charts, or you can find them on the homepage right under recent posts. So the swing trades, these are always going to be pasted for the next day's price action. So he does have Kiwi dollar as an entry for the short side at 69. So what that means, that we're never going to tell you just to short or buy at market unless it's in the Twitter handle and we're actually setting out a trade signal, Karthik. Jamie will do that often if he's getting into a position intraday for the swing side of things. Then we'll put out the entry right there on the Twitter handle. But when it's on this report, it means you put a limit there. Okay, your limit order entry is at 69. That means if the price never reaches 69, Karthik, we never take the trade. Okay, so just keep that in mind. Hope that helps. Okay, gotta run. Here we go. Kiwi dollar testing support. Watch this level just lower into that 68.27, 68.10 region, just lower from where we are right now. Euro Kiwi's up next. That was 5. That was 6, 7. Euro Kiwi is number 8. Here's what Euro Kiwi looks like. I think it was the same day, if I'm not mistaken. It was. Awesome. So, I was looking for exhaustion. I was looking for long entries while above 156. Unfortunately, I missed my initial entry, but boy, did it play out well. Euro Kiwi pulled right back into this support structure. You didn't get any more downside play from this. This is the update again from the second. We came right into this key area of support, 156.80. 156 was the bullish invalidation level, so I wanted to buy while above this region. Like I said, didn't get the opportunity personally to get in, but it ripped. It ripped. Your focus now for Euro Kiwi is like 159.45, 160. Excuse me, 160.45, 160.70. This key region here. Let me just show you the live chart. I'm gonna sit there and talk about it. Euro Key. Okay, so here's the daily chart first, and here's the daily chart from where we were earlier in the week. Okay, we were coming off a big resistance, huge, and that region is being tested right now. We're pushing through it. I need to see the close above. The level is defined by 159.95. We've been calling it 160. It is, excuse me, 159.05. We're calling it 160. No, 159.17. I'm sorry, I can't read what this is saying. 159.04. Huge region of resistance is the 50% retracement. This is from the decline off the highs of 2016, but it's also the 2016 open. Just below that, obviously, you had the monthly open at 58.90. So a nice region of resistance. We were looking for the pullback to get long. Again, bullish invalidation was at 156. So as long as we stayed above 156, we wanted to buy. Here's the breakout. Now, here's the one thing I want to be mindful of, guys. I am concerned that you may be getting a near-term exhaustion on the Euro crosses, and Kiwi's a little bit precarious. So fresh exposure on the long side from here may not be the best idea if you're not already long. If you are holding longs, you know the region to look for, 160.45 into 160.70. Also look to the left there. You have those lows from June of last year and the 100% extension with both converge at 160.45 or so. So the levels are pretty clean as far as the upside is concerned. Here's what the intraday chart looks like. And here's what the intraday chart looked like earlier this week. Okay, really nice slope. Basic trendline support. Take a parallel off that low. Kind of highlighted that region as a bisector. Take a parallel off that high, literally to the pip. Okay, so on this move, I do think you don't want to, again, like I said, this is why I'm a little concerned of getting any type of fresh long exposure from here. Do I think we probably move higher in U.S. trade? Yeah. Do I have a trade set up to try to get long if you're not already long? No. What's the game plan? Well, I would be looking for a rally into here. Possible kickback. Would I be looking to play this short? Maybe on a relative basis if you have the kahunas, guys. You know, it's a trade that's somewhat removed from non-farm payrolls. And if the euro gets a kickback or Kiwi continues to sell off a break of support, you know, I do think you want to be looking for some sort of reaction, some sort of pivot off this zone with a topside break, you know, looking for those continuation towards 62.27 or so. But this is the first area of which I'd start to expect a little bit more rigid resistance on this rally. Any questions on Euro Key? That is number 8. Again, kind of kicking myself. Topside was favored. Didn't get a chance to get in, but you know, this is a break of the weekly open. This is a break of the monthly open. This is a break of the monthly opening range highs, or the weekly opening range highs. So inherently, you are looking for a Thursday, Friday high. Moving right along. Steve wants to look at Euro CAD, did I add that to the list? I did not, Steve. I'm kind of short on time, but you know what? I'm going to make it happen for you right now. I want to see what EuroCAD looks like myself. Ooh, okay. Yeah, I got you, Steve. Wow, okay. So this is a trade that we were following as well. I just want to see, Steve, bear with me one sec. I just want to see when's last time. When the last update was on that was the second. So here's what the Euro. Oh, I'm sorry. You're looking at EuroCAD. It's been a while. 23rd was the last time we updated that. So looks like we just hit the final target at 47 last week. Here's the continued upside break. We're checking the 2016 open as resistance. Let's take it back to the daily chart. Yeah. Yeah. So what's really shaking me out of this one, Steve, is just the CAD. That thing is just insane. It's been just getting massacred. You know what I mean? So obviously, the major pivot break here was 145. That's so far from where we are right now. It's almost 600, 500 pips off from where we are right now. You know, this was a basic pivot break and gap above a long-term multi-year trendline support, which had been tested over 4 times. Break, tested as resistance from the underbelly, and here's the gap higher. On this trade, man, Steve, I can't even think about trying to get long. I need to see a recovery, even from an intraday guy. Even from a guy who's playing this near term, I can't, advocate that. With the same respect, yeah, we are at resistance at last year's open, right? We saw some really nice pivots off that level. But do you really want to be the guy trying to sell while this thing's this high in overbought territory? You just made it's not an outside day reversal, but it's a reversal candle to the upside. It does scream exhaustion from price action standpoint, but we just don't have the validation yet. Let me see what the near-term picture looks like. So Steve, this is how I would interpret the near-term picture, man. See, here's your weekly open. I wouldn't say this was the weekly opening range high. I would say this was the weekly opening range high, okay? Monday, Tuesday stretch. Yesterday's price action still is room within the confines, actually, of that range. And then this was the test of the weekly opening range high, and it's failing below resistance. So for me, you never got a clear weekly opening range here. And I'm not really a fan of getting short CAD after all this. So Steve, I would say, I'm sorry to be a little bit more wish-washy on this one, but the conviction just isn't there, brother. I would say if anything, look for some near-term exhaustion. If you put a gun to my head right now, Steve, I would say that this thing's probably going to pull back. And you look for support around former median line resistance, which held this thing pretty well. I mean, this play was really nice last month, which is why we were following it. Once that gap topside break above 145.50 happened, obviously we took out all the targets, but there's, beyond here, it's a big gap. It's a big gap. So I would be expecting some near-term pullback off this level. Steve, does that help? He says, great, thanks. Hey, you're more than welcome, man. Cheers. I'm glad I was able to squeeze that in for you. Kiwi CAD, I just want to go over Kiwi CAD because it was like another one that, well, it's exactly as we suspected. We were talking about the Kiwi jobs report, and the break above 95.06 was a simple throwover, a false break, and that's exactly what materialized. And it's funny because the jobs report was pretty good, and everyone was, oh my God, Kiwi's breaking out. What's going on? Everyone shuffling to the Kiwi. Well, if you check the Twitter handles and you saw what the commentary was hitting the wires from, market participants, guys, and on a break of a rally like that, it was kind of a scream to watch out for exhaustion and to watch out for possible the throwover or the false break, whatever you want to call it. So that's exactly what materialized. We came right into this 786 retracement. It held as resistance, and once we broke back below 95, which is what I noted in the report, that validated that was a false break. And once you broke back below 95, you'd start to look for southern targets into the median line, back into the 2016 open. So Kiwi CAD looks like this at this point. We made that reversal. We made the break back below 95, shifted the focus lower. We've now taken out pretty much most of the targets into the final one, which would be down here. Okay, so Kiwi CAD, look for the median line. That comes in exactly at the monthly open, the weekly open, and just below that, you have the weekly opening range and the monthly opening range lows, 93.60 into 93.70. Now, interestingly enough, if you take a parallel of this slope, it's going to get messy, but just follow it with me, off these lows, off these lows, boom and boom, okay? You could see that that slope line actually converges on that key pivot that we were talking about right here. So another downside target. And that, the only reason I'm looking at that is because that's the upper parallel. It would be a really nice move to see another drop into this first before a rebound and then inevitably a breakdown. So that's sort of what my mindset is right now with Kiwi CAD. I want to stay bearish sub 94.35 near term. Downside break, like I said, you're targeting the monthly open, the monthly opening range lows, but more importantly, this region into 93.40, 93.47 should be pretty big as support near term. Mr. Kelly says, been short Kiwi 106 pips ago. LOL. Keep it up, man. Nice play. Nice play. Any questions on Kiwi CAD? Nice little throw over early in the week, opening up this decline. If we can only get some CAD strength on some of the other CAD crosses, I would love it. But keep in mind, this is primarily driven by what's going on with Kiwi. I mean, CAD is just, don't even get me started. We'll go over dollar CAD in just a moment. Obviously, tomorrow is a big day because of the employment data. Kelly says, thanks, pal. You guys, your guys' charts rock. Hey, cheers, man. I always appreciate it. Okay, moving right along, Kiwi Yen. As I said earlier in the session, I'm going a little bit more neutral on Kiwi Yen just now because, look, we came into the major resistance level that we were talking about. It held. The pullback is kind of hard to gauge right here because, again, I don't necessarily want to advocate being aggressively long yen, although dollar yen still has a little bit more upside to go, and I think you can get a pullback. I don't want to get aggressive long yen. That being said, guys, put a gun to my head. Yes, I think Kiwi Yen does pull back harder from here. Inevitably, this is a failure to push through some former swing highs and trendline resistance. Again, you're ever trying to assess or ascertain the break of a major structural resistance or support, bring it into a line chart, see where the close. That's as a conviction reversal off resistance about as I've seen. So certainly near term, you have the 200-day moving average here. You have the upper median line parallel there, and obviously in near-term price, you got to snap this real quick. You saw a quick peek through and a quick pullback below. So where do we go from here? Look, initial support 77.15, 77.25. You're basically looking at this slope line, basic parallel off the lows, which converges on a basic 50% retracement of the advanced just this week's range. This does not include the low that we made last week. It's just this week's range. It gives you 77.15 to 77.20, 77.21. And that's where I'd start to look for initial support here on Kiwi CAD. A closer look at price action. This is just something I was messing around with earlier. If we do take just a near-term extension of the decline, interestingly enough, the 100% extension comes in just lower. So if this is just a simple correction, 2 equal legs down, you would still be looking for 77.11, 77.15 as sort of initial area of support. All right, so, and I mean, we could keep putting color on this. I'm just trying to keep it as simple as I can for you guys, but even if you tack on some basic trend lines, you can see some areas of interest here for this decline. All right, so I'm going to take a little bit more of a neutral stance heading into this support while noting the risk here. Obviously, a break below 77 keeps this thing on track, but certainly the reaction that we got here off of this major longer term resistance confluence has me a little bit more reserved as far as playing the upside here in QEN near term. Okay, last but not least, that was number 10, number 11. Last but not least is Euro Oz, and I'll go into your questions. Damn, I'm over on time, but nonetheless, Euro Oz. Breakout. You know, very simple. I don't necessarily have much to throw on this one as far as new commentary. I just did want to highlight this was the update that we put on the 1st. And we were talking about looking to buy the pullback. Same type of deal here. Where is Euro Oz? Was this for you, Pooja? Euro Oz. Here's the Euro Oz. So we were coming into initial support, and we were noting that the break below this region here at 44.85, 44.80 is really the last-ditch effort. I mean, if that had broken, you would be risking a much steeper correction to the downside. Mostly basically the 44 handle, and then that median line that we were looking at for this near-term slope. Well, that held. It held pretty well, too. And not only did it hold, but once we broke through the bearish invalidation level, which was 45.95, remember, we came into the week saying 45.95, the risk is for a pullback while below that level. You got the pullback. Once you ripped through, forget about it. You're looking for those topside targets, and this is a legit breakout. I'll take you to the daily chart first and show you it's very, very similar to that trendline long-term break that we were looking at earlier on the cross. Support, 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 break, acceleration, resistance, continuation to the upside, guys. If we close the day above here, specifically on a daily, you can add that one to the list, on a daily close basis, you're going to continue to favor the upside. Again, I don't really have anything on tap, guys, as far as major levels until you get into like 149, 148.66. You got the 2016 low day close and the 2016 open. I'm sorry, and the 2015 low day close and the 2016 open. Let me adjust that. Right there at 48.99, basically the 49 handle. Intraday looks like this. Sandy and Pooja, I'm long euro dollar. I'm lost with Euro Oz. No guts to short. Can't go long either. Yeah, I wouldn't want to short that, Pooja. I understand that Aussie is going to, like I said, I think Aussie sees a rebound, okay? But I still don't, I wouldn't want to play this short here, guys, because we don't have a major concrete level of resistance. Whenever we're ever going to try to short a rally or a breakout, guys, as much as I try to warn you guys not to try to necessarily do that, and I'm a near-term guy, so if anyone's going to try it, it's going to be me. You'd still need to wait for price to be at structural resistance or support. I do have a soft target here at 47.67, but the momentum's in overbought on all different types of time frames. Even if we get into the 60-minute, it's overbought, Pooja. So I don't blame you. I don't blame you. I do think you get a pullback. I think euro dollar risks that too. Here's euro, guys. I can't move out without talking about euro. Euro's at resistance. This is the chart that we highlighted back earlier in the week, guys. There's no change to any of the levels. Again, if we take a quick look back to the euro dollar charts from earlier, oh, I haven't updated the euro here. Again, search function is up and running. Quick fix for that. I've been kind of leaving the euro, I guess, to Jamie. Here's the last euro update from my side. It was the 23rd. Okay, now it's after the gap to the upside. Here are the levels, and this is what I just wanted to highlight, guys. Nothing has changed. When I mean nothing, I mean nothing. Okay, it's the same chart from the 23rd. There's no change to any of the levels. So all I wanted to highlight is this near-term resistance, which seems to be very inconspicuous. Not many people have been kind of watching this level. I brought it up to a couple of different technicians and trader friends of mine here in the city. No one seems to be looking at that level. We've been looking at it since last week, and the level is defined by 109.30 into 109.37. Again, I'm not saying that that's a rock hard ceiling. I'm just saying for the last 2 weeks, any rallies that Euro's been making, if you've been booking profits there, you've been doing all right. That was my argument all day yesterday. Because it hasn't been able to make a material close and push above. Very, very simple. They're longer dated fibs, but irrespective of that, and irrespective of what anyone says, objectively, it's the weekly and monthly opening range highs. Like, I don't understand why people are arguing. So for me, the level could not be cleaner. 109.37, let's just stretch it into 109.40 for argument's sake, and 108.72. That's what we came into, the week looking at as we came opening right here. And that's still the same levels that we're looking at now. Obviously, this pullback here didn't quite make it down to 109.20. We continue to move higher. We're trading in this band right here, right now. Okay, look for a break of that band. It now defines the weekly and monthly opening range. I like the long side while above 108.20. I don't necessarily think we'll get a spill into 108.20, but as long as we stay above 108.20, I do continue to favor the long side here in Euro. Questions on Euro dollar? Sandy doesn't think it's going through resistance here on the Euro. I mean, for me, I'm out. Any long I take on this trade is I've been booking well ahead of 109.30. I just don't want to mess with it. If we get the 109.30 break, 109.40 break, cool, great. 109.83, 109.90 is your next topside target. But I need to see a break of this near-term range to get some sort of directional bias or conviction on directional bias here. Okay, we'll cut exposure before NFP, but specifically what level would you put a stop to hold through NFPs on balance? Pooja, for what trade is that? We'll cut exposure for NFP. Specifically, what would you put a stop to hold through NFPs on the balance? Oh, for Euro dollar long? So 108.20 would be it. Oh, you're long from 108.86. So your awesome entry. It's a good question, Pooja. I would put a partial stop below last Friday's low or last week's low, okay? And I would put the rest of the stop sub 108.20. I think like I said, if 108.20, which is the gap low, post-gap low, the 50% retracement, and certainly on the longer term chart, also highlights a swing low that we made back here in March of last year. So a big level in my mind. If we break below 108.20, that shifts the broader picture for Euro. So partial stop maybe below that Friday low, larger stop below 108.20. And one thing I do want to also note is that you're making an outside day reversal. As it stands now, the session hasn't even started in the US. It's way too early. But if we were to close at these levels, you're making an outside day reversal to the upside at resistance. Sometimes can be a hook for some near-term exhaustion. So watch that range break. Watch that range break. Largely speaking, still liking the upside of Euro. Next near-term target, I'm going to drop that down just here to highlight it for you guys. That's going to be right around that 109.80, 109.83, 109.91 level. All right. Hey, you're more than welcome. I didn't get sterling Oz. I will go over sterling yen really quick just because it's a very big level that we're coming up on. 764 retracement, also represented by the swing lows that we made back here in June of last year. What can I say? It was a perfect storm. You know what I mean? Yen weakness, pound strength. From an intraday picture, there's not much to do except wait for a little bit more of a constructive pullback to get long. This is a much wider range ATR. So Graham, I don't have anything near term here that I can tell you with conviction. I would say look for interim support at 144.60. Bullish invalidation still has to be at the weekly and monthly opening range lows. Okay, so it's a ways away from where we are right now. This is a way larger ATR. A topside break, I'm looking for 148.45. I know, again, it's basically like 300 pips from where you are right now, but it's pound yen. does these kind of things. All right, so what it's worth, Graham, hope that helps. Last but not least, Sandy, pound Oz. I just want to see what the chart looks like here. Okay, another one we haven't updated in a couple of weeks. Here's the last time we were looking at it. Last final target was 172.57. That got taken out. So at this point, yeah, I need to rework these levels for you as well. I don't have anything fresh on you for this, Sandy. Let's see what we can do. Okay, just trying to check out the slope here. Looks pretty good. The median line formation looks pretty good on this, Sandy. So I would say stay constructive near term above the monthly and weekly opens. That would put us bullish invalidation up here. Okay, that's 172.57 into 172.80 as bullish invalidation. So as long as price stays above this, and you're looking for a stretch near-term topside target 75.67, and then the upper parallel. Obviously, in time, that's going to be determinant, but right now it stands somewhere in the range of 176.70. Constructive above 172.50. That's how I play this one. But just a quick reference there, a snapshot. I haven't had too much on it, so I'll see if we can't put something together up for next week. I am way over on time. This is probably the longest I've run over on my hour threshold. So guys, I want to thank you for sticking it out with me. I hope everyone has a great day tomorrow with NFP. Stay light. It's still the first week of the month. We're still heading right into the open of May trade. There's a lot more event risk to come. Dollar CAD, I can't leave without showing you that real quick, guys. Dollar CAD, a double whammy tomorrow for dollar CAD. We are expecting CAD employment data as well. Net employment change is expected to show a 10,000 print for Canada. Unemployment expected to hold at 6.7%. Here's what dollar CAD looks like on the intra. Look, it's been a slow burner this week. I would be interested in fading a spike into 138.38, 138.30, which is a huge technical threshold, which we've been watching for quite some time up here. Or if we start to get the break back below the weekly opening range low, the monthly opens, I would be looking for a drop back into 35, 35, 35.50, which is a nice area of support and an area of interest for possible re-entry on the long side here for dollar CAD. So a little bit far. We're sitting mid-range of where I want to operate off of, but something I'll definitely be paying attention to as you get both of those releases at 8:30 simultaneously tomorrow morning. Again, best of luck trading, guys, and I will see you all. Remember, on Monday morning, we do our public webinar on daily effects. Tuesday, Wednesday, and Thursday, back here on SB. Best of luck trading, guys. See you then. Cheers.